So SPY continued with the chop all of last week. You can see here we were kind of range bound between 408 roughly to 415. And this is kind of due to the fact that we did trade within this similar range all the way back end of May, beginning of June. So there's no surprise that we did stop over here. But that begs the question, will we continue higher and get over this range, or will this form a double top before pulling back potentially? So in this video today, I'm going to kind of discuss what I see in terms of the overall market. I do want to discuss a lot of the big tickers such as Google, Tesla, Apple, etc., because those will give us a glimpse on if this rally can continue, because these tickers, especially the big caps, have led this rally for the most part. So that's going to be interesting. And then also look at some order flow and dark pool orders throughout the past week and get us a sense on where we are right now. Is this rally weakening, or is there going to be more continuation? So first off, Tesla was one of the first big caps to actually start this big run up. You can see here this big run up started around like July 13th, and we finally broke out all the way back here at July 18th, July 19th roughly, which was right before actually where SPY started to rally. You can see here we started on the 14th of July, so this was just a day before, and it has been one of the strongest big cap tickers during this entire rally upwards after we broke out of this pennant pattern here, and it just continuously went up until we actually have seen some signs of a pullback starting as of the last 2 days, so Thursday and Friday. So this candle right here, very, very bearish, does have some volume behind it. And there was a lot of sell pressure also back on August 1st, which this was a bearish candle. However, it did go up 3 more days afterwards. But then eventually we did fall down on August 5th, so Friday. This was supported by a lot of bearish flow, as you can see here on the Cheddar Flow application. Just a ton of bearish flow hitting the tape. Some of these were out of the money, but a lot of these also were in the money for the downside here. But for the most part, this was pretty bearish. Morning had a lot more call flow during the day, but eventually they just got a lot of puts later on in the day with a lot more premium. So something to note there. One thing that we do have to be cautious of during this pullback of Tesla is, one, this was one of the leaders of the big caps for this large cap rally, especially for the market-wide rally in SPY. So we need to make sure that certain levels, such as 843 right here, and also this other level here of 793, are able to hold, because if not, this could lead to a lot more downside, especially if 760 goes. If 760 goes, make sure you highlight this on your chart, then there's going to be a lot more downside for Tesla. And if I go to my macro chart here, if 760 goes, there is a potential we could go lower and go to the bottom of my channel I have right here, probably around, if it were to happen around September, this could bring us sub 600. That'd be very, very far on Tesla in terms of downside. Now, again, does that have to happen? No. Right now, we are in the middle of this channel. As you can see, this is acting as a supply zone in the middle of the channel, roughly around 900. The top of the channel right now is around 1,000, a little bit over 1,000. And then right now, the bottom is roughly 600. So that's a very wide range we're trading within. And right now, we're smack in the middle of it. So going to be interesting to see on what direction it chooses. But these levels, the 3 levels I showed with you, do need to hold if it does want to continue with upside. And also, if you're a bear, you're going to want those to break for more downside. We want to take a quick minute and talk about our video sponsor, Aura. At Cheddar Flow, we provide dark pool data to give a glimpse on how big money is hiding their orders, but this isn't the only way people hide in the dark. If you're constantly browsing the internet to keep up on the latest stock market news or even check the options flow, chances are your information could be floating around in the dark web. One big worrying statistic is that identity theft cost people in the US $56 billion in 2020. That is more than the market cap of Shopify and even Square. That is where Aura comes in. Aura continuously monitors the dark web, looking for your emails, password, and even social security numbers, and sends alerts straight to your phone when they find anything suspicious. Aura also gives you near real-time alerts on suspicious credit activity, like if someone were to try to open up a loan or credit card in your name. And they also automatically send requests to data brokers on your behalf to remove your information to help reduce the amount of spam and robocalls you receive. Aura even comes with an antivirus or VPN, keeping you safe on all fronts of the internet. So if you are interested in checking this out and staying protected online, head over to aura.com/cheddarflow and you can get a 2-week free trial. So mitigate your risk on the internet just like you do in the stock market, and check out Aura today. So Google was one of the most bearish big caps we actually had during this rally. As you can see here, this did not rally as well in comparison to these other tickers such as Tesla, Apple, Microsoft, etc. This one is still range bound in the current channel that we're in right now. You could even say that this is a bear flag because of the pull right here, and then we've consolidated in this range from here. So this would be pretty bearish going forward, especially if the market, specifically SPY and NASDAQ, do fall off going forward here in the fall. Which, if you guys have seen my previous videos and kind of like know me for a while now, you know that I am bearish for the fall. So Google would actually be one of the tickers that gets hit the hardest because it is not showing good relative strength right now. You can see the rally right here is pretty weak in comparison to everything else. And again, we are range bound. So another thing with that, looks like a big institution also noticed the same thing, because if you look on the Cheddar Flow application, you can see here there was a $4.6 million worth put that is out of the money, and pretty far out of the money too. This is for a 107.5 strike. This does have some time on it, so it does add in the fall months, kind of like my bearish thesis for fall months. So they would be able to capitalize on all of that. But they got 11,479 contracts. This is a very large order, very, very rare for Google especially. Google is not too liquid, same with Amazon in terms of the option chain. So typically you won't see that large of orders on here unless they're pretty confident. And this was also at the ask. So very, very interesting order. I'm going to be following this order specifically on Google because it is really rare you see something like this. And it looks like, again, like I said, they could be noticing something similar to what I'm noticing. This is one of the weakest of the rally so far, so it could get hit very, very hard if the market does decide to start falling eventually. Now, with that, we do look at SPY here. SPY has been rallying for a while now, and we did see some consolidation here like I shared with you in the intro of the video. If we were to start to fall off, let's say theoretically, now again, there still could be a lot more upside on this move. Again, this is very strong at the moment, and it needs to kind of shake out all of these shorts before it makes its next move down potentially. But if we were to theoretically start to sell off from these levels, we need to keep in mind this orange line here. And this is the orange line I've shared with you guys in many, many videos, all the way from the 2009 lows. And I'm not going to share how I got it again. You can look back on basically like all of our weekly recaps for the past month. I've shared this line because it's very significant. This line is acting as a key support going forward. If this goes, especially after we've reclaimed it twice, if this were to go twice and we fall under, this would be very, very bearish going forward. And this is something you need to note on SPY. So right now it's sitting at roughly 397. If we were to fall down to it time-wise in terms of August, it would go up to around 400 if we were to fall down to it in September. So just keep in mind, because of the angle of the line, it's going to increase in price as time goes on. So you need to be careful and make sure that you do understand this line is very significant going forward, and just make sure you are aware that this is where it is right now, and make sure to draw it on your chart because it will act as a key support level, especially on the daily and weekly charts. And if it is broken to the downside, that shows that there is going to be a lot more bearish emphasis going forward. So do be careful of that. Like I said, we have rallied a lot above it right now, as you can see, and we've filled both of these big gaps from the gap downs previously, but just keep in mind, you do need to make sure you are aware of this going forward. Now for Apple, I want to look at the 15-minute chart right here, and what you can see on these three blue lines is a potential head and shoulders pattern on here. Now, does that have to happen? No. We technically broke out above this pennant. You can see right here. However, we do have a full weekend to go by, so there is a potential we could either gap up really high or gap down below, which would be technically a fake out because we broke out on Friday. So that would be very bearish going forward, and there could be a possible head and shoulders that forms because you have the left shoulder, the head here, and then the right shoulder. So something to keep in mind, especially with this news that did hit over the weekend. Now, I'm not a big news guy. I just like to trade price action, so I don't really care much about the news. I'm just sharing that with you guys if you were interested to check it out. But I'm going to see where we open on Monday. That's all I care about. I don't really care about the news as much. I want to see where we open. As of now, it's just us assuming things at the moment. So I want to see where we open, but just giving this to you guys so you can kind of get a sense on what could happen there. If we do go to the daily chart, which is what I really want to talk about today, you can see here the channel that we are in right now, and it's a very big channel. You can see we go from all the way around lows of 130 all the way to the high resistance around like 172, 173. So this is a big rally, and this is one of the biggest rallies we've seen for the big cap so far, along with Tesla, like I shared with you earlier. Apple's rally has just been really significant, honestly. It's been all the way from lows of 129 to 165, and that's a very large rally for a stock like Apple that isn't supposed to move as much as it has right now. Kind of similar to what we saw over here, just even more amplified going forward here. So this is interesting, and it's something that we need to be careful of, because could we eventually reach the top of this resistance? Yes, and there are a lot of eyes on this resistance because of how significant it is. So it'd be interesting to see if we could get here, but there's some cautionary tales along with that, and that's because the NASDAQ is reaching a very key resistance at the moment, and the NASDAQ is key for charting Apple because both are going to work in conjunction with each other, and Apple is the largest weighted stock on the NASDAQ. So very interesting to see. We have gotten very close to the top of this resistance. We haven't touched it yet, so there is potential that we could touch it in the future here or near-term future. But something to note is we are very close to this resistance, and this is most definitely going to have an impact on Apple. So we do need to be careful of that. And also, Apple did start its rally way before we had the big rally for the S&P 500 and NASDAQ. This was even before we saw Tesla's rally. You can see here the pivot low of this before the big rally started was all the way back on June 30th. This has been a very, very large and main leader of this rally along with Tesla. So this could be one of the first tickers that could start to fall down because it did start first. Kind of like what I was talking about with Tesla earlier. If we go back here, this is starting to fall off here, and we're seeing a pullback because it was one of the first tickers that started to go before the big market-wide rally. Apple as well was one of the first tickers to start to go. So we could see potential warning signs of that pullback if we see this start to fall off first. So something to note.